Hello to all Inderes TV listeners and viewers. Anora reported their Q2 this morning, and we are here for interview CEO Jacek Pastuszka.
Thank you.
And the new CFO Stein Eriksen.
Thank you.
Joining from beginning of this month, I guess.
Yes, that's correct, Rauli. I started 5th of August.
Yeah,
yes.
So let's start with you actually, if you give a brief introduction of yourself.
Yeah, so I started 5th of August, really looking forward to be a part of the Anora team with such strong brands, strong categories and really good market positions. So before joining Anora, I worked almost 6 years as a CFO at XXL, listed company on Norwegian Stock Exchange, and probably heard of it, the biggest Nordic sports retailer. Before joining XXL, I worked 17 years at Orkla, somewhat similar to Anora, with upstream value chain, strong market position, strong category positions. So yeah, that's my background. Yeah.
Great, good. Let's jump into the Q2 then. You posted quite flat beverage sales, even though the market was actually going down. So can you elaborate a bit how the quarter went on the top line and what drove this achievement?
Yes. Yeah, we definitely believe it is an achievement to deliver flat net revenue on the beverage business in today's environment. And that's exactly what happened. We have reported, as you know, minus 3% for the total company. But then when you decompose this net revenue by segment, it's very visible that it all comes from the industrial one, whereas the beverage is slightly up. You know, we would prefer it to see it a little bit more up, because then we could round it off to 1%. We cannot, it's 0.4 in the end for the beverage segment. But yes, we are happy with this development. What drove it? As always, a combination of factors. Obviously, our consistent efforts to offset the volume erosion, which is inevitable to some extent, but which seems to accelerating recently. To offset it with a combination of pricing and mix management. But also, and I was very open about it in the call as well, there was this element of pipeline building for the wine business in Finland, 8% wine business in Finland. It was not sizable in absolute terms, but it was exactly this small difference that we put on top of our net revenue performance that moved it from negative to positive. Yeah,
okay, good. And then looking at the markets in general, like mentioned, they were down, especially Finland and Norway now in Q2, but we had also some negative calendar effect with the timing of Easter at least. And so how do you see the underlying market sentiment? Has it really weakened?
That you are mentioning the calendars as Easter movements, because they had some impact on the sell-out from the monopolies, especially in Finland, looks like, which makes Q2 standalone look dramatic in terms of decline.
Exactly.
But then maybe the Q1 was a little bit too optimistic. Yes. But when you look at the total first half of the year, in all three monopolies, although it's more pronounced in one places than in others, in all three we see a continued erosion in volume, which is not a surprise. That's the business we are in. Yes, we are not in the volume business, we are in the money business, in the value business. So this is not concerning or surprising. We had it included in our plans. Although I admit that what we had in our plans was a low single-digit increase, was not something that we are seeing right now, which is close to almost double-digit in some of these markets in terms of volume decline. So I would generally say what does not surprise us is the fact that the volume erosion continues, because it's expectable. It's sort of part of the business we are in. What we are a bit worried about is the accelerating pace of this erosion.
Yeah, good. And maybe the Stein on the earnings line, you did improve from admittedly quite weak comparison from the previous year, but anyway, improvement in the earnings despite a slight decline on the top line. So can you talk a bit what was driving that?
No, I think Jacek already mentioned part of it, but the main explanation for the improvement in profitability is related to positive mix pricing and then some reduced input costs. So, and that explains the 3.5 percentage point increase in gross margin.
And divisionally, there was
divisionally, like you saw, wine with almost 5% margin increase, and also spirits with 4.2% margin increase. So very broad-based margin increase. Also, we saw the same thing in industrial. So very happy with a strong margin increase in the quarter.
Okay, then you, Jacek, mentioned already the alcohol law change here in Finland, and the 8% wines coming to the stores. Can you talk a bit about what kind of impact you expect? Of course, we don't know yet, but expect going forward
exactly.
in terms of volumes and or margins for you.
Yes, part of the answer is already in your question.
Yeah.
we don't really know. Yes, it's premature. At the same time, I fully understand the interest in this, and also I can assure you that we internally are very interested in this development. Even we are spending quite a lot of time discussing the potential behind it or the threats behind it, because at the moment there are still both.
Yeah.
The potential is obviously that we will find new consumers, that we are also following up on our sustainability agenda. We are reducing the alcohol intake, so it also fits very nicely into our policy or our agenda on low alcohol. Yes. So we are positive on this side, and obviously the retail channel, in terms of its reach and distribution and reach to consumers, is much broader than the alcohol stores, simply because of the sheer size of the chain and the distances for the consumers to travel. Yes. So from this point of view, it is something that we look with interest at. Yes, we are looking forward to it. Especially, and we see a little bit of this in the second quarter, for us a bit of addition, a few additional million in net revenue make quite a lot of difference, yes, in terms of net revenue development for the total company, while it is not ruining our profitability, because in the overall scheme of things, it can still be managed as for improved marginality of the total business. So that's the opportunity part of it. The threat, and obviously there is lots of discussion and questions around this. How will it impact the footfall in the alcohol monopolies? Obviously, if consumers start visiting less frequently, if they start shifting their the supply of wine to grocery, and if we don't have this additional trip during which they can pick up some liquors or spirits, other spirits products, then obviously it creates a risk for the total, for the totality of our business. But it's premature to conclude which way it will go. We may still have the benefit of a bit of incremental sales, yes, from the groceries, without really much impact on the monopoly. I think the important factor here, because somebody has to give, so to speak. Yes, it needs to come from somewhere. So it's more of the question of where will it come from. And I don't have any data on this, but there is some anecdotal information already that it may be coming from other low alc categories that are available in grocery. Yes, and we have a few candidates without naming names or categories. But for the people who are usually looking for consumers who are looking for low alc proposition from grocery, no, that's one of them, a new one actually. So there may be some cannibalization of the existing business, low alc business in grocery.
Great. Yeah, let's come back to this maybe later this year. Or
exactly. Yes, we are observing it very closely. I can assure you.
Yeah, I'm sure. Then on the organizational side, you announced also a change of the head of industrial segment in conjunction with the results. Can you open up a bit of what was driving that?
Yes, these two things. So relatively poor performance of industrial in the first half of the year, and Risto's decision not to continue with us after a relatively short period of time. They are unrelated. Risto took his decision based on for personal reasons. We are sorry to see him go. I think the company could have benefited even more from his senior management supply chain experience. Also, he has quite a lot of experience in listed companies, which is also obviously helpful for our management team. So I was looking forward to continue working with Risto. He decided differently. With Hannu Vahamurto, the person from within the organization who takes over from January 1st and who will be heavily involved, obviously, in the next few months, working hand in hand with or alongside Risto for the handover. What we get with Hannu is in-depth understanding of the side product and contract manufacturing business, especially the one established by Altia over the years. He was actually the one who was building this business over the last 14 years. And this side products business and most of the contract manufacturing is specifically the ex-Altia thing, as that's the Finnish part of the business. We were not engaged in side product sales on this scale and contract manufacturing on this scale in any other market. Yes.
Right.
So what I believe Hannu brings, and this change, what it brings, is in-depth understanding of this part of the business, which requires attention, scrutiny, and maybe some intervention as well down the road. Yes. I have to admit that I'm not an expert on technical ethanol or starch or animal feed. Yes, it looked like a good business and stable business. The developments of the first 6 months of the year demonstrate that it was probably less stable. Yes, that definitely I can speak for myself than I thought it will be. It created a headache for us this year that we didn't see coming initially, at least, and now it's obviously quite clear where it's coming from. But Hannu Vahamurto, so the person who will take it over, he's managing this business right now. And in his expanded responsibility, he will be also able to contribute to the continued evolution in this business.
Good, that's clear. And then finally, the guidance part, you maintain the full year guidance of adjusted EBITDA of 75 to 85 million, but has there been any kind of changes in that during the first half? How did the first half go kind of in line with your expectations?
Yeah, we maintain it because we have no clear reasons to do otherwise. Yes, as you well know, the big season or the big quarters are still ahead of us. The big season is ahead of us. Actually, the 3 weeks of Blossa sales in Sweden are still ahead of us. Yes, and this things will have a significant impact on our performance, obviously, for the full year. We are confident that we will deliver within the forecast with all the information that we have right now, even considering the fact that the industrial segment has created a bit of a headache in the first 6 months of the year. Yes, so our guidance is maintained.
Okay, it's clear. Thank you, gentlemen, and good luck for the rest of the year.
Thank you very much.
Thank you.
Thank you.